Hi guys, this is Dan from the Investment ABC, and this video is dedicated to all those people who are planning to jump onto the property ladder in Sydney, Australia. I want to talk about the property prices here in this beautiful city. How much do you guys think Sydney house prices will decline? Or do you think it will stabilize and move higher in 2019? Just write me your thoughts in the comments. I am really looking forward to your replies. Well, here is my take on what property prices will most likely do in the near future in Sydney. To have an idea where prices might be headed, we need to look at the price growth over the last years. This chart here from smhs.com shows that the average dwelling price rose from 600,000 to almost 1.2 million in late 2017. Since then, we almost retraced 20% to now $1 million. The $1 million question now is if we are heading further down or not. To answer this question, we need to know which fundamental drivers led to this 100% rise from 2012 to the end of 2017. Number one, and I think this is by far the most important driver, is interest rates. The RBA, the Australian Central Bank, lowered interest rates from 4.25% in 2012 to currently 1.5%. We can clearly see the correlation between rising prices and decreasing interest rates. The last rate cut was in August 2016. Since then, the Fed left interest rates on hold. Will the Fed decrease rates further when the property prices slump continues? The RBA stated that they could do so. The current consumer price inflation rate is 1.9%, down from prior 2.1%. In the last decades, consumer price inflation were in the range of 1 to 5%, so that the RBA has some room for further rate cuts if we just look at inflation isolated. The Australian dollar plummeted 35% from 2012 until now, compared to the US dollar. And if the RBA would cut rates further, the Australian dollar would decline even further compared to the US dollar and also gold. On top of that, the risk that further rate cuts won't have any effect has a high probability, since the debt level is just too high and people are saturated with all sorts of debt. The household debt to GDP ratio is with 121.3%, one of the highest in the Western world. This chart here shows how much the Australian consumer is more indebted compared to some of their neighbors. We can see that Ireland suffered from the property bust in 2009, when their debt to GDP ratio reached the 120% level. What happened after the bust in Ireland was an almost 50% drop in property prices during the next 3 years. So will Australia experience a similar fate? What do you guys think? Inflation might pick up very quickly and spiral out of control if the RBA keeps cutting rates to save the property market, leaving them with no choice but hiking rates sharply again in an already weakening economy very soon after. This would be the worst case scenario in my opinion. Therefore, I do not expect the RBA to cut rates in the near future. Furthermore, rate cuts to reflate the housing bubble would enrage the population, which is already suffering from unaffordable housing prices and ever-increasing rents. The second driver is foreign investments. The amount of foreign buyers activity from 2012 to 2015 almost quadrupled. If we have a look at these two charts, we can see that the percentage of foreign buyers who bought new properties rose from approximately 5% in 2012 to almost 20% in 2015. From the top in 2015, the percentage of foreign buyers declined back to around 6% now in 2018. Also, the demand for established properties from foreign buyers rose from 4% in 2012 to 12% in 2015 and collapsed back to approximately 5% in 2018. Here is another diagram which shows that the residential real estate approval collapsed from 40,149 worth about 72.4 billion in 2015-16 to around 13,189, worth 25.2 billion in 2016 and 17. And most likely it even fell further in 2018. The decline from the peak in 2015 is the result of a 0.75% surcharge foreign buyers have to pay from which New South Wales introduced in 2016. This surcharge was raised again in 2018 from 0.75% to 2%. No wonder foreign investors stopped buying. Imagine your land value is 1 million and you have to pay $20,000 on land tax only. The return on your investment would decline to almost 1 to 1.5% after paying income taxes, even if you would be able to rent it out for approximately $800 per week. And on top of that, as a foreign buyer, you have to be scared that the government is increasing the surcharge any moment. Until the government abolishes this tax, the foreign demand won't return in my eyes anytime soon. So that another driver of this real estate boom falls away right now. Another negative effect on the foreign investment is that the Chinese citizens have a harder time to get money out of the country, since Chinese and Americans are the number one and number two countries who buy in Australia properties. The third driver is negative gearing. In my opinion, negative gearing is one of the most important drivers for the high real estate prices in Australia compared to other countries like the US, for example. It is such an incentive for the rich to buy more and more homes just to offset the loss with the income tax, even though you wouldn't buy it at these prices if you would only consider the yield on your investment. The Labour Party in Australia announced that if they win the election in 2019, they would change the laws for negative gearing, making it less attractive for investors. So investors really have to pay attention to negative gearing in 2019. Number 4 is the high immigration. Australia is one of the most desired countries for immigrants. The chart shows that 104,000 new people migrated to Sydney, while 15,000 people moved from Sydney to another state, so that the net growth in 2016-17 was approximately 90,000 people. In 2018, the amount of immigrants fell due to fewer work visas being approved. In a survey, the majority of Australians feel that the government should reduce immigration to Australia. So we might see fewer immigrants in the next few years. Number 5 is strong economic conditions. From 2012 until now, Australia experienced strong economic growth and high employment rates, which was an important factor for the property boom. People felt safe to take on more and more debt. Australia had its last recession in 1990, so that many don't even know how a recession feels like. Most economists don't think that economic growth is weakening a lot in the next 2 years. We will see if they are right or not. These are the major drivers for the real estate boom we experienced in Sydney. In my opinion, Sydney has a high probability to face a similar fate like Ireland. The interest cuts from 4.25% to only 1.5% led to an increase in the household debt to GDP ratio unlike any other Western country. Many people bought not only one property but 2 or 3 properties with minimum down payment or interest-only loans, just to sell them at higher prices. Current prices are just too high and the rental yields too low for these people to buy long-term with the intention of renting the properties out. Since I do not think that the RBA can afford to decrease rates further to ease the debt burden, many of those people who bought those houses to flip them are trapped. They have to sell them as quickly as possible with a loss, or hold on to them and keep paying the mortgage while property prices decline further. I feel a little bit sorry for the RBA. They are trapped to do nothing and hold the interest rate steady for a long time until they are really forced to do something. Even if the RBA is doing nothing, the US Federal Reserve will most likely continue to raise their interest rates 1 or 2 more times before they are forced to stop in 2019. Since Australian banks also have funding costs from abroad, they will pass these onto the consumers in forms of higher mortgage rates. Banks are already panicking and tighten their lending standards, and in 2019 they are also sharing customer data between each other so that it will be harder to get mortgages approved. I know from friends and family that many people only got their mortgage approved after manipulating their salary statements. All these people will have problems at some point when they have to refinance and experience the stricter banking lending, which they are not used to. Many of those interest-only buyers will be forced to sell in an already weakening market. Also, what happens if the RBA is forced to increase interest rates because some rating institutions are worried about the sky-high household debt and decrease their credit ratings? Bond investors would demand a higher yield. This is one possibility no one seems worried about. This time, the market won't also be saved by foreign demand too, since the surcharge kills any incentive for foreign buyers to invest in Australia anymore. The change of negative gearing rules is also looming like a Damocles sword above the property market. If Labour really decreases the incentives from negative gearing, expect property prices to decline even at a faster pace. There is a high probability that we will experience a global economic slowdown in 2019 leading into 2020. There are many indicators pointing to that. If you want to know more about which indicators, watch my video where I'm talking about the overvaluation of the stock markets. Also, the US-China trade war shows its effect on China the more time is passing, and if China slows, Australia will also feel the pain. Also, the weakening housing market itself will lead to people being more cautious and fearful. They won't have the luxury to take out equity from their homes to buy new cars and other unnecessary stuff, which was boosting GDP so far. People will cut back on their spendings, which will lead to further economic slowdown. An economic slowdown will lead to fewer migration to Australia, which will dampen the demand for rental properties. Like I said, most people don't even know how a recession feels and are not prepared. The growth of GDP during the last years was also the result of people depleting their savings and consume more. So if most people do not have any savings and the economy is going into a recession, and on top of that you have huge amounts of debt, I feel a little bit worried about the property market in Sydney, to be honest. Another negative factor for the property market in Sydney is the huge pending supply, which will hit the markets in the next years. I have never seen that much construction like in the last couple of years here in Sydney. Almost everywhere people were demolishing their older homes to build duplexes to live in one and rent the other one out. Also, the amount of high-rises and flats increased significantly, which will lead to renters having a choice to choose where to live. They want to live in newer buildings so that it will be hard for all those people who bought shabby houses in the hope of renting them out before they can sell them back at a higher price. If these people can't find any tenants, they are forced to do major renovations or sell the property. I think we will see a lot of these older houses hit the market at some point. The last factor which will most likely have a negative effect on prices in the short to medium term is the poor quality of some of these newer buildings. With the latest negative media coverage about the Opal Tower at Sydney Olympic Park, expect buyers to be extra cautious. I don't want to scare anyone, but I see the perfect storm brewing and hitting Australian property market very soon. The damage which the storm will do depends also on whether Labour wins and makes changes on negative gearing or not. In my eyes, the best place to be as an Australian investor right now is in gold. It is no wonder that the gold price is reaching its all-time high these days, measured in Australian dollars. Since the Australian dollar will tumble in a severe real estate crash or a major recession due to the RBA being forced to cut rates even lower, we will most likely see gold prices surpassing the $2,000 mark soon. After finishing my analysis, I see Australian property prices drop another 20 to 30% from here in the next 2 to 3 years, unfortunately. Most of the time, if something goes wrong, it goes wrong from all sides and directions. I will keep covering the Australian market here at times in my channel. So if you like this video, subscribe and hit the like button. If you think my analysis is wrong and it is the perfect time to jump into the Australian property market, leave me some comments about why you think so. I wish you all a happy and healthy 2019. Thanks again. Bye guys.